Hello, hello, hello. Test 1, 2, 3. Hello. Alright, guys, I finally got this working. So, this is day one of learning stocks until I become a millionaire. So, alright, let's start. Stock market. Alright, let's start. Stock market beginner's guide. Piece of ownership in the business. Stocks insurance. Okay, I know this. New York Stock Exchange. NASDAQ. Okay. The Dow Jones. Okay, 1 vote for each share you own. Okay, let me buy in order. Replace in order to buy or sell through a broker or online trading platform. You're generally buying and selling stocks to other investors. The stock is traded on the New York Stock Exchange. For example, your order will go to the trading floor. Supply and demand. Lots of investors. Okay, so it's just supply and demand that determines the price. Many factors can affect demand. Okay. Better than expected profits. Recession. Okay. Invest in strong companies. Their stocks may rise in value over time. When you later sell your shares, the difference may even be what you already paid and what you sold was for a gain or loss. Oh, capital gains tax on that profit. What is a mutual fund? Everyday investors don't have the means to buy stocks in dozens or even hundreds of companies. Buying in a mutual fund is an affordable way to do that. A mutual fund pools money from many investors to buy stocks, bonds, or other securities. A fund manager decides which securities to buy and sell inside the fund. There's a single guy deciding that, or probably multiple people. One big advantage of mutual funds is diversification. If some stocks in the fund lose value, the losses may be more than offset by gains among other fund holdings. Okay. If couple stocks lose, and you can make it up with other stocks gaining. Mutual funds do not trade on an exchange and can only be bought or sold once a day after market close. They don't trade on an exchange. So what do they trade on? Mutual funds or not? Well, it's probably not best to trust that. So let's get ETFs and stocks. Okay. Most require a minimum initial investment of $500 for a mutual fund. So your mutual funds, it's like you buy. Okay. $500 or more. Trades executed once per day after market close. So you can either buy it once or sell it once after market close. Settlement period for 1 day. Okay. Short sales allowed. What are short sales? Short selling. Let's get this ad. Short selling is a strategy where traders profit from a decline in the price of an asset, often a stock. In a short sale, investors borrow shares of a stock they believe will fall in value, sell those shares on the open market, and later buy them back at a lower price to return to the lender. The difference between the sale and buyback price is the profit. However, if the stock price rises, the losses can be substantial, and there is no limit on how high a stock price can go. This makes short selling a high-risk strategy compared with simply buying shares and waiting for the values to rise. Okay. So you cannot short mutual funds. You can only buy them and sell them. You can't borrow them. Okay. Limit and stop orders allowed. No. Okay, that makes sense. Limit is you choose to buy a portion of the mutual fund at a certain price. If it's below that price, you'll execute it, but not above that limit. Stop orders of if the mutual fund goes below, whoa, goes below a certain price or value, then I guess you're not allowed to sell it. Trading fees, funds may charge sales loads as well as short-term redemption. So is it one? All right. ETFs with fractional share trading, typically $1 or $5. So what does that mean? Exchange traded fund is an investment fund that holds multiple underlying assets and can be bought and sold in exchange, much like an individual stock. Ah, it's the SPY. Okay. There is no transfer of ownership because investors buy a share of the fund which owns the shares of the underlying companies. Unlike mutual funds, ETF share prices are determined throughout the day. A mutual fund trades only once a day after the market closes. So it's like a regular stock, but you're buying um, portions of multiple stocks. Okay. Settlement period 1 day, trade day is one. Okay. Throughout the trading day, extra 100 hours. All right. Short sales allowed, yes. So you can short SPY. I know SPY is a big, what do you call it? It's a big ETF, which tracks the S&P 500 index. All right, limited in orders, okay. ETFs do not carry sales charges, but they can, all right, whatever. Stocks, same thing as ETFs. All right. Mutual fund trading, huh? Okay. What is a target date fund? Found in many workplace retirement plans. Target date mutual funds are designed for people who want to put their investments on autopilot. Wait, give me 1 second. Let me just keep this here. Okay. All right. What are bonds? Wait, what's a target date fund? Targeted mutual funds are designed for one to put their investment on autopilot. You simply choose a fund with a target year that's closest to when you expect to retire. Retirement 2050, 2060. Those fund managers invest your money more aggressively when you're young and gradually shift to a more conservative portfolio as your retirement nears. Okay, so yeah, probably, I'd say this is for a long period of time. So if you're starting at 20 years old and you're trying to retire at 60, 65, so today's 2025, so that's 45 years. So you're going to retire at 2070. Okay. So I'm curious as to how often these fund managers invest in a target date fund or in the mutual fund in general. Okay, exchange rate fund ETF. Yeah, we know ETFs. Annual fees are lower, including this one's commercial. Bonds, IOUs. You lend a company or government money, and in exchange, you receive your original investment plus interest when the bond matures at some future date. Some bonds are riskier than others. The more risk there is that investors may not be paid back, the higher the rate of interest is promised. So basically, you're buying. If you buy a bond, you're lending it's like a loan to the company or government, and they'll pay you back, I guess, 20, 30 years maybe. Watch our invest in stock market, trying to make money. Younger return saves are trying to weather out these ups and downs. Alright. Okay. So let's pull up Yahoo Finance. Let's see what's going on here. Alright. Dow Eyes record as United Healthcare jumps. Oh yeah, I remember the news about it. The whole what is this? The Dow is the what? The index rose 0.2%. So retail sales rose 0.5%. U.S. consumer sentiment down, bro. 270 to 308. This is because what's his name? Warren Buffett sold on Friday after regulatory filing showed Warren Buffett's Berkshire Hathaway about 5 million shares in the company. Man, 13%. Intel shares jumped Friday after Bloomberg report said the Trump administration is considering taking a stake in the chip maker using funds from the U.S. CHIPS Act. Trump met with the CEO. Yeah. They called him to resign, and now he's trying to buy a stake in Intel. Okay. Alright, that's fine. So let me change this here. Might gotta use a different browser. Just give me a sec. Okay, to that one viewer who's there right now, feel free to chat something. Say something in the chat so I know you're there. But thank you for pulling up to the stream. This is day one. Day one of learning stocks until I become a millionaire. And it might take a year, it might take 10 years. Hopefully it doesn't take 10 years. It might even take a month, but it probably won't take a month. And actually, no, it definitely won't take a month. It'll take years, bro. That's fine. It's day one. All right. So, companies, okay. Technical trader, all right. Line, bar, and candlestick. Then we'll examine more popular techniques. Between charts and how to analyze them, pricing, visualize, okay, separating volume, soaking, high, low. This is a bar chart, okay. That connects all closing prices of a stock for a certain time interval, giving traders a quick assessment of trends. So it's a quick assessment of trends. It's simple to follow, but it won't tell much of each day's activity. Okay, so it's just for assessing trends over a period of time. Alright, the bar chart is another way to chart price activity. It shows high, low, open, and close for a given period of time. So this means, like, for example, this line, it opened here and it closed here within that time interval. Let's see if I can zoom in. And like over here, it opened here and it closed down here. I'm pretty sure that's what it's saying, but we can check. And these are bar charts, so I think these just say open and close, open and close. Okay, candlestick is a variation of bar chart. More information. Bullish or bearish sentiment by displaying distinctive bodies that are green and red. Closes higher or lower than the open. Range, okay. Okay, bar chart, high, low. Oh, okay. Open and close. All right. So in this, within that period, it reached, okay, for example, within this period, this was its low and this was its high, but it opened here and it closed here. So say this is 2 minutes. The start of that 2 minutes, it was at this line right here, and then it rose up, within that 2 minutes at some point to a little bit above that from its open, and then it went down, 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 down within that 2 minutes, and it reached the record low of down here. But it eventually went back up and closed. Like at the end of that 2 minutes, the price is right here. Okay. Yeah, high low. Yeah, that makes sense. Open, close, open, close. Okay. So stock short patterns for traders. Okay. As shown in the chart below, stocks that move up over a period of time with a series of higher highs, and higher lows. Higher highs and higher lows are considered to be in uptrends. Stocks that move down with lower highs and lower lows are considered to be in downtrend. Okay. So we can see, like, obviously once this chart, like say this is a chart of a stock over the past 2 or 3 months, obviously seeing this we can label it like the resistance is up here because it never actually crossed the resistance. It couldn't cross it. So this resistance, like the selling power here is greater than the buying power, so that's why it couldn't break over that resistance. And that might be easy to say, but what I'm most curious to learn about is the downtrend and the uptrend. Because say you didn't have all of this, like say that this was just a chart, like right here maybe. How do you know that this stock is going on a downtrend? So you might, well, if you're like until here, right? You could just assume that this was a support, like right here, like it won't go down here, and then it broke through that support to go even more down. And then you can say, okay, this is a downtrend because it broke the support. Like, can we say this is a support? Maybe. So this is support because it's been haggling around here for a couple weeks, whatever. And then, so when there is a new established support, does the resistance also change, like right here? Because it's not going down lower than this, but it's obviously much lower than its once high than of this resistance that it can break through. Okay, uptrend, old resistance becomes new support. But the old resistance was up here. No, it's not. This is the original resistance, downtrend, support, and now it goes up uptrend, and it couldn't break through this resistance again. There were too many sellers rather than buyers, so I went back down, and then I guess it stays here. This support and goes up, resistance, and just haggles around this price, and this is a support. Okay. Support is essentially a temporary floor for stock prices. It's a level where a stock trending down stops sinking and reverses course. It stops sinking. At some point, the seller stops selling, the buyers take control, and the stock starts rising again. At this inflection point, the stock's low price is identified as support, and it may remain in place until a new trend takes place. After a rally, okay. Let me just pull this up. stock rally. Well, I trust that. A rally is a period of sustained increases in the price of stocks. Okay, it can happen during either a bull or a bear market. Mm, After a rally, the stock may reverse course and come down to test the support level. Breaking support would require high levels of selling volumes so that the supply of shares on the market takes the price lower. If the selling volume isn't there and the stock does not penetrate support, the support level is considered strengthened. Okay. Short sellers will likely rethink their positions, while buyers will start to take control and help raise the share price. Resistance is the exact opposite of support. It acts as a ceiling for stock prices at a point where a stock that is rallying stops moving higher and reverses course. Why? Is it because the amount of people buying stops? Buyers will need more conviction to penetrate the resistance levels in future rallies. Okay, so the resistance also becomes strengthened. It is important to understand support and resistance are merely psychological levels. They're psychological. Okay. Oh, then the stock charts from people buying. Entry and exit points, okay. At least two confirming stair steps in the opposite direction of the previous trend. If a stock has been trending down and suddenly reverses before it can be called an uptrend, instead of merely a short bear rally or dead cat bounce, look for confirmation in the chart pattern. At least one higher high than the first and one higher low than the lowest price of the previous trend. So like this. Wait, no, not really. Yeah, a higher high, a higher low. At least two. There are many breakout patterns that can provide useful entry and exit points, ascending and descending triangles, bearish and bullish flags, and pennants. What is a pennant? It's like a flag, okay. Bro. Is the stream lagging, guys? Okay, something happened. But I think we're good. Alright. Bullish flag. Wait, bearish flag? How's this a bearish? So it's like it's downtrending, but the buyers are not willing to give up, and eventually the sellers take over. Okay. Multiple indicators. God damn, I've been streaming for 47 minutes. Oh, probably gonna turn it off soon. Like a couple more minutes. Like 15. is this? It's 10 million. The volume. And below it's 50. above, so it's overbought. Alright, guys. So I'm going to end the stream off for today. We got a lot of progress. Finally, having these averages, I should probably delete this. This is the 20-day moving average. 50 and 200 for the recently pumped stock of UNH because of Warren Buffett bought it, I guess, in his filing. So according to the Schwab article, I'll just keep the RSI indicators at 70 and 30. Above 70 means it's overbought, and you can see a huge spike here. All right, guys. So good day.